Hey everyone, me Kevin here. Cathie Wood and the team over at ArkInvest just put together a webinar and, it went on for about an hour and 5 minutes. I'm going to give you a complete recap and my commentary because, well, that's what I do. All right, so Cathie Wood starts off by saying the economy's going to be on fire as long as we get the stimulus package that we're expecting, which we think will be at least $1.5 trillion. Obviously, Biden's saying 1.9. So for some reason, Cathie Wood thinks the stimulus package is actually going to get ground down a little bit. We'll see what happens. She mentions that manufacturing is struggling to keep up because there's so much demand, and that right now we're not seeing any inflation going into people's wages yet, which is a sign that we're probably not seeing any inflation yet, but we should prepare for inflation coming in the future. More on inflation coming later in this summary. She does think that earnings profits will be explosive this year. When asked if stocks are in a bubble, she says she doesn't think so. Instead, she thinks, if anything, bonds are in a bubble. She mentions that some money has already outflown from stocks and gone into bonds, and she thinks bonds are in a total bubble. So, in other words, she thinks bond prices are too high. So we'll see. If there's a bubble anywhere, she says it's in fixed income, bonds as an example. She thinks in stocks, though, that there's going to be a big sort of bifurcation. So kind of like that K-shaped recovery we talk about with humans, where the rich keep getting richer and the poor keep getting poorer. She thinks that kind of same thing happens in stocks or will happen in stocks. She thinks the winners in stocks are going to be leading edge companies on the leading edge of innovation, and that they're companies who are investing in becoming a part of the massive innovation future that we're seeing or will see in the future. Okay, well, that was a little complicated. Basically, companies that are innovating, yes, good. Other companies that are taking on debt to pay dividends, bad, losers, old. So new guard versus old guard. And she thinks basically the old guard is going to get crushed. Instead, she loves companies like Tesla and Roku, companies that can be global, and she thinks these are companies that are going to be winner-take-most companies. She is a fanatic about autonomous taxi networks. She thinks that these are going to be natural monopolies wherever they exist. She thinks that it might be possible that these companies, these robotaxi companies, have more success than we even think. I don't know if I said that already, but anyway, she's saying that robotaxi networks are going to blow up. We don't think stocks in a hole or in a bubble, she goes on to say. We think markets are enormous and global, especially at companies like Roku and Tesla. And because they're enormous and global, yeah, they might look expensive. Yeah, they might look like they've been going up, but it's because they're freaking awesome and they have so much reach. She does say that she thinks there are going to be, or already are, a lot of value traps in the market. Value traps are companies that look like they're becoming cheaper, but they're actually more dangerous to invest in over time. And then she started talking about Walmart, Costco, and Target, which I was kind of surprised that those kind of got mixed so closely together because I didn't think that Walmart and Costco and Target were all that bad. But anyway, she encourages people be frosty, so to speak. Be aware and do your research, do your due diligence. Then she also slammed. She basically paper-handed us, y'all. And we love Cathie, but she just paper-handed. She came out hardcore on AMC and GameStop and said that these are moonshots, that their bonds at like AMC have gone from 5 cents on the dollar to 80 cents on the dollar. And all that's really done is taken money from people who are investing in the stock and given it to the people who are investing in the debt. And it's basically a free bailout of debt. But she says the problem is you have a lot of people investing in these kinds of companies thinking that there's going to be some kind of resurrection of these companies, that these basically dead companies are going to come back to life. And she's basically like, good luck. Okay. Anyway. Then she talks about DNA sequencing, AI, blockchain, autonomous. Those are going to be things that are going to scale exponentially. These are the winners, she says. She also says there are going to be a lot of losers, though, and this is one of the reasons she likes investing in the bigger front runners, the winner-take-most companies, like the Teslas of the world. Then there are, let's see, so that whole section was kind of her intro on the market bubble and that. Then we get into some Q&A, or actually some statements about Bitcoin. So let's see, on Bitcoin, we hear from Yassine on Bitcoin. One of our big ideas was that Bitcoin's role would evolve into a corporate cash role. And then Tesla legitimized that decision, and this is true, legitimized Tesla, obviously coming out and buying $1.5 billion of Bitcoin. Big deal. As a roll of corporate cash, it's basically right along the line of what they thought would happen. They mentioned that if 1% of all companies put money into, if all companies put 1% of their corporate cash into Bitcoin, Bitcoin will go up by $40,000. If companies in the S&P 500 put 10% of all of their money into Bitcoin, then Bitcoin could go up $400,000. Yeah, that's insane. Then, let's see. Then there was talk about basically governments creating central bank cryptocurrencies. These are basically stable coins to just make transactions easier. They're not really investments. It's kind of like one stable coin of, let's say, the Federal Reserve. Like, here's the Federal Reserve cryptocurrency. It's not something you would invest in. It's just like one of this coin equals $1. And we're tokenizing it. So basically we can transact faster and safer and across borders without having to deal with like wire transfers and ACH and all this clearing time and all this crap. And ArkInvest kind of came to this conclusion that commercial banking might get screwed in the long run. Like, bye-bye JP Morgan, we don't need you anymore because we're using these central bank coins. Now, in fairness to JP Morgan, I think they see the writing on the wall and they're already inventing their own stable coin. So they're trying to get ahead of the game. Let's see. Then they ultimately think that Bitcoin is going to continue to run and get to a $5 to $10 trillion market cap. In the chat here, we did a little calculation and determined that if Bitcoin goes to a $5 trillion market cap, each coin would be worth like, I think it was like $236,000 or something like that. Just dividing 21 million coins, right? So 5 trillion divided by 21 million. Do that math, and there you go. Whatever that works out to. They see Bitcoin as So then they talked about ride-hailing and Bitcoin combined. And this was kind of interesting. They're like, basically what they were painting the picture of, although they didn't use Tesla in this example, what they were painting the picture of is, imagine Tesla's doing robotaxis in China, and people want to get into the Chinese robotaxi taxi, but then they have dollars and not the Chinese currency. Well, now you have an exchange rate and you have an exchange risk and it's a headache and blah, 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 blah. But now, introducing Bitcoin, accepted in all Tesla robotaxis. You can pay Bitcoin anywhere in the world. It's the same thing. It's the same currency. That's kind of what they were alluding to here. They didn't say what I just said, but that's basically what they meant. So then they basically slammed Uber and Lyft. And they're like, yeah, Uber and Lyft don't even have a chance in this market. Sucks for them. They're going to get replaced by robotaxis. Also, my conclusion, they didn't say that. They had a much more elaborate explanation. Bottom lining, okay? They took an hour and a half, an hour and 5 minutes to say what we're going to say in 15 minutes. So we think robotaxis could be very profitable. They think it's going to be $1 trillion earnings market by 2030. That by 2025, robotaxis could have a $3.8 trillion enterprise value. That's obviously different from earnings. They think innovation in the future is going to 5x all innovative markets, and it's just going to leave behind all of the other crappy companies that exist, so to speak. They're really into this whole innovation thing, in case you haven't caught on to that. They're really happy that the dude who's going to head the SEC is into cryptocurrency. He's like, yeah, crypto, yeah, good. Okay? That was literally like a 10-minute conversation right there. On Tesla, they're like, oh yeah, so sure, Tesla is doing things differently than Waymo because Waymo uses mapped roads and LiDAR and Tesla uses cameras, but we're siding with Tesla on this one, and if Tesla can crack the code, then they're going to be so far ahead of everybody else because they're using this camera technology that nobody else has been solely relying on. Kind of a bullish thesis there for Tesla, but it's also a potential risk for Tesla. So if Tesla's camera tech fails, then it's a problem. I think worst case scenario, Tesla has to come out, slap LiDAR into their cars by replacing all the mirrors in the cars, put like a microvision LiDAR in the mirrors, boom, now you got forward-facing LiDAR, perfect, you solve the problem of not having had LiDAR in Teslas. I don't think it's that big of a deal. It could be done. It could be expensive to retrofit the cars. So go back and fix up those cars that are on the roads. They didn't talk about that. they're kind of like, yeah, cameras, good. So we'll see. Then they talked about drones. Like, yeah, so drones, good. We really like drones, they said. We think it costs a human operating a drone $8 to deliver a package 10 miles. So a human with a joystick, let me go deliver your Amazon package or whatever, right? And they're like, well, meep, if we can just have a robot do it, and it's going to be like, I just did the same work for 25 cents because the robot's doing it. So obviously that's, what is that? 4 times 8 is 32. That's 32 times cheaper to just have robots flying themselves to deliver packages and deliver food. So drones, they're really bullish on that for the future. They think there could be $100 billion in delivery revenues by drones in 10 years. Another transformation, they think that social media sites are going to incorporate e-commerce more. And then websites like Amazon are going to incorporate social media more. So you're basically, she's kind of predicting like this. Like Amazon has more social media and social media has more storefront stuff. Which is kind of funny because like 3 years ago, before they had like merch stores on YouTube, I had a video, it's still up. It was like 3 years ago. Yeah, it was definitely 3 years ago. It's 2018. I made a video and I'm like, one day YouTube will literally have a store where instead of you having to go to like meetkevin.teachable.com to see my courses, which you can get with the coupon code HODL down below, or HODL, depending on how you say it. But that there will just be a shelf below the videos for like courses and e-commerce products of all types. They then later came out with the Teespring stuff where you can get like shirts and mugs that show up below videos. I think that's gonna blow up. Like not the Teespring stuff necessarily, but selling whatever the heck you want in the future will blow up down there, and then YouTube will just take a commission and they'll have like reviews and stuff like that. So I kind of agree with Ark on this, and this is something that I've kind of been thinking is something that's almost been needed. Like I don't want to think of myself as like, oh, I'm genius, I'm thinking like ArkInvest. No, it's more like it's a no-brainer, right? But then they're also saying that Amazon, and this was more interesting because I didn't think of this, they're thinking that Amazon might become more of a social platform where it's like you could start seeing what your friends are buying and what your friends think about products and what your family's buying. That was interesting, like a social network on Amazon almost. Okay, whatever. They're really bullish on that. Okay, they're modeling a big increase in that. They think advertising on TV revenue, which is a $70 billion advertising spend per year right now, is going to basically fall off a cliff. And all that money is going to go online or to connected products, which could be like connected TVs or maybe even Peloton. I don't know. Then regarding the rise of Clubhouse, they didn't like the idea of investing in Clubhouse as much as they liked the idea of investing in this company called Agora.io. So go to Agora, Agora.io. Ticker symbol API. It's a Chinese company. 75% of revenue comes from China. And basically it's like the back end for like a Zoom or a voice channel like Clubhouse. On genomics, they think that the big priority is figuring out how to deliver better care with telemedicine, but then also investing a lot in R&D for having better care for people, like actually treating stuff. Okay, I mean, we get that, so that wasn't too surprising. They totally ragged on 23andMe. I didn't like 23andMe either. I did, but my thesis was totally different on 23andMe. Like, I did a video on 23andMe. I wasn't happy with it. They had a really cool thesis on 23andMe, and they're talking about how 23andMe uses microarrays when they look at your DNA to sequence your DNA. And they're like, yeah, that's like super old school. Like we're on short sequencing right now, and we're already moving into long sequencing of the genome, which I guess is like the next level to the next level. That's the way they explained it. And then they said Ancestry moved away from microarrays, and after that they realized like, oh crap, yeah, that's really old school tech. And they think that's like bad news for 23andMe. Then on inflation, Cathie Wood comes back on and says that she thinks we're going to see, she talks about, and I've talked about this on the channel quite a bit too, that in April, May, and June, and I've mentioned this many times, we are going to see inflation come in potentially as high as, she says 2 to 4%. I think between 3 to 4%. And the reason is because inflation readings were so low last March, April, and May, and June because the pandemic just hit and prices fell. And so year over year, we're going to see inflation come in high. I personally think that's going to lead Bitcoin prices to go up in, April, May, and June. But then when inflation readings go down again, even though they're antiquated measures of inflation, it's possible that people could be like, oh, I thought there was going to be a lot of inflation, and now there's not. And then they're like, oh, I guess we don't need Bitcoin anymore. And who knows? There could be a fall in Bitcoin pricing. So just something to be aware of, and that's just my thinking, right? But she talked about that. She is a little bit more of the mindset that the Fed is going to raise rates sooner. I don't align as much with her on that. I think she thinks the Fed is going to potentially raise rates as soon as potentially early 2022, the way she's talking. I think the earliest, starting right now, that the Fed would raise rates would be 18 months from today, which would be closer to the end of 2022. So she's a little bit more bearish on that than I am. And she actually thinks that Bitcoin is an inflation hedge. There are a lot of people that argue that and go, no, Bitcoin is not an inflation hedge. Whatever. Everybody's got a different opinion. You got to make up your own. Then she talks about how deflation is actually a good thing when it's technological deflation. A really cool split on the deflation argument, that deflation for technology is good because more people buy it. Like when phones become cheaper, smartphones, more people have a smartphone. Makes sense. I made that example up, but that's what she meant. Bad deflation would be like prices go down, but you're a struggling company and now you can't pay off your debts because you're getting less revenue, and that sucks. Good deflation would be prices are coming down for products, more people can buy it, your profit goes up because more people can buy the product. Kind of like a LiDAR argument, actually. That's really annoying. Kind of like a LiDAR argument. As the price of LiDAR comes down, more people can use it. That would be a good form of deflation. That was it. Yep, cool, perfect. So, hey, if you like my perspectives, make sure to check out the course down below and use that coupon code HODL or HODL. It is down below. Thank you so much for watching this recap of the ArkInvest video. If you found it helpful, consider sharing this. And folks, we will see you in the very next video. Thanks again for being here. Bye.